Hey traders, Mike Sir here. Welcome to my live weekly trader psychology live stream series where I help you with the mental side of trading. All right, today we have a special live stream where AMA, ask me anything. So any questions that you have related to perhaps trading psychology, anything with regards to any of the videos that I have produced, any trading related questions, whether it's technical analysis, fundamental analysis, essentially you're able to, on this live stream, ask me any questions that you guys have. So what I want to do is, if you have any questions for me, please type them in the question box below, and let me know if um, in terms of the specific of the question. Yeah, let me know those questions. But we'll get started with some questions that I have gotten a lot on my YouTube channel, and I will go through them first. All right, so let's get started. All right, so here is a disclaimer. Any trading advice or anything that I speak on this live stream, please consult your financial advisor before making financial decisions. All right, so let's get started right here. All right, so I've gotten a lot of questions from you on the YouTube comments box. So what I'm going to do is I'm just going to go through those questions and answer them. And again, if you guys have any questions, please type them in the question box below. And my apologies if it's a little bit too small in terms of these questions here, but I will read them out for you. All right, so the first question I have is there any way to make money on the way back? Long trades are far less risky than shorting. If so, do you know of any examples? So this is related to a video that I did on the $660 million profit that these crude oil traders made. So just to kind of refresh memory, these oil traders basically made this significant amount of money when oil pretty much plunged below zero, went as low as almost negative $40 per barrel. So in terms of, is there an example where you can make money on a long trade where in terms of, instead of shorting oil, in terms of buying oil? Yes, of course. That's probably the more common types of ways that traders are able to make money on crude oil, or in terms of any financial instrument, is to buy and hold it for a while and then sell for a profit. So I'll just kind of maybe elaborate a little bit further. Some of you guys perhaps may not have shorted before, meaning selling something with the hopes of buying it back at a lower price, versus going long where you buy something with the hopes of the value of the asset that you are holding to go up in value. So typically, most people who are short or betting prices will go lower, they're shorter term traders generally, unless you believe an asset is going to go to zero over the long term. Generally, most people who short are short-term traders. It could be a day trade, it could be a swing trade, but generally, usually people who are short do not hold for a long period of time, versus people who are long definitely have a much longer term horizon, and it could be in the sense that they are long-term traders or long-term investors who buy and hold. So in terms of an example, I mean, I've talked a little bit about this in one of my recent videos on a billionaire who made money through trading crude oil, Pierre Onderon. You should definitely check out that video for examples. All right, the next question I have is, do you have any book recommendations on trading strategy? Now, there are so many books out there on trading strategy, so I'm not going to recommend any specific book. But for example, I talk about so many different types of strategies in profiling all these top traders is to go through those videos and determine what type of strategy that you like. Now, in terms of strategy, obviously there's so many. You could be shorting, it should be a shorting strategy, it could be a going long strategy, it could be a strategy where you make money when the markets go sideways, it could be strategies based on earnings. Again, I have this in my videos that you should definitely check it out in terms of company earnings strategy. There could be trend trading strategies where you follow the trend up or follow the trend down. There are strategies related to catalysts, whether it could be the Fed, it could be company news, it could be, again, any specific related type of catalyst that could trigger the price of the asset to go up in value. So what I would suggest is, if you're looking for strategies, definitely go through my channel first, as there are lots of strategies that I cover from many successful traders. All right, the next question I have is, Sir Mike, can you discuss the supply and demand on your view? Thanks, and collecting different strategies as of the moment. Okay, so simple, I would say, in terms of supply and demand, is really, if you kind of think about it, is I'll talk about it from one perspective, is when we talk about supply and demand, we're talking about supply and demand of perhaps of the asset, right? It could be an asset such as crude oil, for example, since we're talking about that. If there is greater demand of crude oil, that could indicate that the economy is recovering because people need more crude oil. For example, it could be used for manufacturing, it could be used for many industrial purposes. So if there is a greater demand, that hence indicating that the economy is growing very fast. And if you talk about supply, is you want to take a look at how much oil is being produced. And especially with crude oil, you have to look at OPEC. OPEC is a consortium that really has a big control over oil supply, with the Saudis being the biggest driver of oil prices, mainly because they are the biggest producer of oil. So when we look at supply and demand, we're talking about the actual commodity, right? We're talking about if there's more demand for something, prices will go up. If there's more supply, then prices will go lower. Now, the other perspective you can look at is in terms of demand and supply for a particular company or particular stock. If you see that when the price goes up and there is huge volume, we can indicate that there is lots of demand for that price of the stock. If there is a lot of sellers, meaning lots of supply of the stock, meaning people want to get rid of it, and you see that there is huge volume when the price goes down, that indicates that there is more supply. Hence, the price will go lower. So just simple things like that will allow you to be able to determine, well, if there is more demand, more buyers, you would buy. If there's more supply, there's more sellers, then you should sell. All right, the next question I have is talking about Tesla. Is what's his trading? CFDs, stocks, ETFs, and platforms. Okay, Tesla mainly focuses on two specific instruments. One is stocks, specifically Japanese equities, as well as many Japanese traders focus on trading the Nikkei futures contract, which tracks the Japanese index. Okay, the next question. I've been unsure about the market due to volatility. At the same time, I still feel it's the right time to make profit because of the price decrease. Heard someone speaking of making over $3 million from $180,000 capital since the pandemic, and I'm driven to ask what techniques is needed to achieve this. Okay. So as you've known, many traders have made a lot of money since the pandemic. Many have held on to 2022 and has given a lot of profits back. Many who have continued to hold today, specifically in select stocks, have made money. So, quite frankly, in terms of the way to uh, turn 180,000 to over $3 million, is you got to look for big market moves. You need to really hold through big market moves since the market fell sharply in March 2020 and then have risen very sharply in 2020, 2021. You are able to make those type of profits, especially if you are buying and trading stuff that has gone a lot down in value, or you were able to make a lot of money on the way down. Now, the other way in terms of being able to make these type of returns, again, if you watch the videos that I made on these type of top traders who have made a lot of money, they've utilized leverage. They utilize derivatives, perhaps futures, perhaps option contracts, perhaps CFDs, or perhaps utilizing margin on their stock trading account. That's one of the ways, or two ways, right? One is you need to have the big market move, or you need to have greater purchasing power that you don't necessarily need for the stock to go up 100%, just for you to make 100%. And that's where a lot of these stories come from, is that they see an opportunity, they play a little bit more heavier, utilizing specific leverage. And it's not necessarily them taking a huge risk. It's not always the case. It's just that they are able to time the trade quite well and utilize other instruments to lever their capital. And once they're in profit, they choose to add on to those profits. So it's not always the case. I get it all the time where all these top traders you're profiling, they probably taking a lot of leverage. They probably went all in. That's not necessarily the case. Okay, next question I have. What's your view on this? Technical analysis is BS in trading and professional trading is purely fundamental analysis. Okay, so it's a very, very good question. It's basically the debate between, should we focus more on fundamental analysis? Fundamental analysis could be if you're analyzing a company, analyzing their financials, analyzing the company's management, prospects, analyzing basically fundamentals of the company. Or it could be fundamentals around the whole economy, fundamentals in terms of, especially if you're trading currencies, fundamentals of the entire or specific countries in terms of global economies, in terms of the Federal Reserve, money supply, all that type of stuff, right? Those are analyzing the fundamentals. Versus technical analysis. So technical analysis is essentially analyzing price history or price action and trying to decipher based on past history and utilize that data to forecast future price movements, right? So that's the definition of technical analysis. So which one is it? Well, the answer is really both. You need both in order to be successful. And this gentleman thinks that technical analysis is BS in trading. Well, why does it work? Why does analyzing price action lead you to be able to forecast future prices? Now, I'm not saying it's 100% foolproof. Just like if you analyze a company, you think it's undervalued, you think the price is a good buy, and hence the price should go up. Well, in some scenarios, the company remains undervalued, even though the value of the company should be worth more than what the market is pricing it at. Well, the simple answer is nobody's focusing on it. Nobody's buying. So what if it's undervalued? No one's interested. No one thinks it can go higher. So that's why I don't think it's BS in terms of technical analysis. I don't think fundamentals is only for professional traders. What I will say to you is that you will need both. And what I will also say to you is the professional hedge fund managers, the ones with lots of analysts, lots uh, uh, of basically a trading team, uh, do have a lot of companies who focus on the fundamentals of a company before buying in, and not just focusing on the technicals. However, I will say to you one more thing is that day traders, short-term traders focus more on technical analysis rather than fundamental analysis. All right, guys. Make sure if you have any questions, please type them in the question box. I will get through them. So I'll go through a few more of these questions, and then I'll open the floor to more questions from you guys. All right. So the next questions I have talking about this natural gas trader. Natural gas is at its 3 years lowest. Can we add on dips? And this gentleman says losers add to losers. So if some of you have maybe kind of heard me talk about this, I've been, and also maybe perhaps you're one of my students, I've been talking about natural gas quite a lot in the past few months. Natural gas is very, very low right now in terms of prices. You're looking at, I believe it's has a Friday, it closed around 240, 250-ish. Can't remember the exact price. And it used to be a lot higher. So the fundamentals, I would say, okay, let's just say if we talk about it from both the fundamental and technical, fundamentally, it is the reason why the prices have gone lower is because of supply and the lack of demand. Recently, some things have changed where the supply has decreased, and hence the prices have gone back up a bit. If you were to look at it from a technical standpoint, the prices have been hitting lows that we have not seen for the past 3 or 4 or 5 years, and hence they've been stabilizing. So again, if you were to analyze it from many perspectives, is that if you have a longer term horizon, it's not a bad risk to reward type of scenario. And again, I'm not here to endorse it or not. I'm just saying that when you do look at an asset that is low, and again, this gentleman had losers add to losers. It is correct. If you are trading and you bought it at, let's just say 5 and it's at 2 something right now, you should not necessarily add to a losing position. You should only add to winning positions. However, if you have a longer term perspective and you're an investor, you may look to continue add lower as it goes lower, mainly because you have a longer term horizon. But still, at the end of the day, you know what your maximum risk is. All right. Next question. Isn't Warren Buffett a hedge fund manager as well? So Warren Buffett is not a hedge fund manager. So what is, a lot of people have a misinterpretation. What is a hedge fund? Well, a hedge fund manager. Hedge fund is, if we talk about hedge means that they are protecting themselves. They are playing the opposite direction as well. And generally hedge is meant to indicate, especially to people who are hedge fund managers, that they are also shorting the stock. Either they are protecting their capital against further downside or future downside, or they are betting a certain asset to go down in value. So Warren Buffett does not bet that stocks go lower, prices go lower. He's mainly a long only investor. So he is more in terms of what we call a fund manager or long only fund manager. All right. This is talking about BNF. What do you think of applying this logic to crypto? So a lot of the strategies I talk about, not specifically BNF, is it can be applied to various markets. However, what I will say to you is that there are certain strategies that are more effective in specific asset classes versus others. So I'll give you a very quick example is crypto is traded 24/7, 7 days a week, versus stocks that are traded Monday to Friday, 9:30 a.m. EST to 4 p.m. EST. So whenever you apply certain strategies to a market that never closes versus a strategy that closes a significant portion of the day, then it's not necessarily a strategy that can work as effectively for both asset classes. So I'll just keep it at that. Okay. Next question is, I don't understand why you're featuring this guide. The theme of your channel is to let people learn from the best in the business. So again, this is referring to a video I did on this gentleman who made $110 million, a university student, on betting that Bed Bath & Beyond stock will go up in value. This guy was reckless. He just got lucky. The stock didn't raise on good fundamentals, but rather it got bid up or short squeeze. He could have lost more than 95% of his $5 per share speculation. I don't understand why you're featuring this guy in a way. I think you're being irresponsible in your narrative because you never warned naive beginners that this is an extremely dangerous thing to do. Okay, so everything this gentleman comment is valid. So I would say that I mean, a lot of the videos that I produced, they're educational purposes, and obviously if it can educate you, it is true that he got lucky, and obviously he had looked at the fundamentals and thought perhaps it's undervalued. That could be a case. However, obviously in this case, it was not due to his fundamental analysis of the company that led to him making that much money. It's just that it is true he got lucky where it became a meme stock and this price skyrocketed, not due to fundamentals, but just due to people trading it and speculating on it. So is it reckless? I would always say to lots of people is, whenever you are a beginner trader, yes, you may think trading is so easy just because you see all these stories of these people who make millions. I want you to kind of experience it for yourself. Once you experience trading and just trade with capital that you can afford to lose, experience that first, and then you'll have an idea, hey, is it easy or is it not? Okay, next one, again, talking about my BNF video. What was the 50 stocks he would invest in? And this gentleman says probably Nikkei 225 stocks. Maybe just picked up a few stocks from Nikkei to work in. Okay, so in terms of everybody should have a watch list of stocks that they're familiar with. So again, if you're trading the stock market, you should always have a list of stocks that you are monitoring, whether swing trading, day trading. Specifically for BNF here, he likes to add the stocks to his watch list of 50 of stocks that have activity. Maybe they had some news recently. Maybe it's in play. Maybe it has irregular volume, or maybe it's a stock that has a future potential catalyst, right? So he adds stocks that he's basically monitoring. Once the stock doesn't move anymore, he removes it. So anytime that, again, you guys see something that you just want to monitor, keep track, put it on your watch list and see if there's activity. And perhaps if there's continuing activity, then you continue monitoring it. All right, guys, so I'm going to open the floor to some questions that you guys have for me, and because I have more questions from my YouTube channel. All right, so let me answer any questions. So you guys, any questions, please type them in the question box. Mohammed says, why did I delete the Ralph Wayne video, the South African Forex Trader Millionaire? I just didn't like so much negativity around the video. I didn't want to take away from the focus of the channel is really to educate you guys. And there's so negativity around Ralph Wayne. He could be a scammer. I don't know for sure. Some of you have indicated to me that he is. but I thought I produced a video that can educate you, so that's why I took it down. DC says, why do traders generally risk smaller and smaller percentage of their capital as their account grows, instead of keep risking the same percentage per trade as the account grows, so to potentially make more? Okay, very, very good question, DJ. I will say to you, it's fear. So let me, and actually, I'll state another point. So when you don't have a lot of money, okay, I'll talk about this from a psychological standpoint. When you don't have a lot of money, whatever you have to risk, it's immaterial. But once you accumulate more and more capital, you're afraid to lose it. So hence you risk a smaller percentage, or your risk becomes lower and lower. Also, I would say, okay, so that's one thing. Okay, it's the fear of losing what you have and what you gain. Okay, that's number one. Okay, psychologically. Number two, I will tell you, as people trade more and more over the years, it also has to do with their age. When I was younger, you speak from my experience. When I was younger, I was a big risk taker. I'm still am to a certain point, but I'm definitely not as risky. I don't take big riskier bets compared to before. So therefore, maybe you were risking a little bit before, but as you got older, because you have responsibilities, you have maybe a mortgage, you have kids, to the tuition, and all that stuff. So therefore, you risk lesser, right? So it's due to financial circumstance. Okay. Number three, I will say to you is, as you get to a certain point, and let's just say you risk to a certain percentage, you may not be able to risk the same percentage. For example, let's just say you risk 10% on each trade, or on each trade before. So let's just say before you started off with, let's just say $1,000. So you risk 10%, that's $100. Okay. But once you, let's just say, accumulate a lot of capital, let's say to $2 million, would you risk $200,000 on one trade? Yeah, you could say that. Yeah, you should keep it the same. But let's talk about even further, risking $2 million on trade. So maybe perhaps some of the assets that you're trading, if you trade too big, you'll move the price as well. So that's why some people who manage billions and hundreds of millions of dollars, they don't just risk the same on each trade. They essentially slowly scale into a trade to not affect the price. Okay, so that's the third thing. But DG does have a point, is if you're not in any of these cases, you should treat it the same. So then therefore you're able to make more money. Okay, but in my opinion, there is both psychological as well as just based on how you're doing. You don't apply the same type of risk tolerance as you get more capital. And also, I'll just add one more point, is as you accumulate more and more capital, it's not about making the same percentage. It's more about, and I'll tell you, once you become wealthy, your risk tolerance goes down, mainly because you don't necessarily need to risk the same amount. You're comfortable at the stage that you are in. Okay, Elias says, I read that stop losses are useless since you go in with the mindset that the stock price will go down and reach your stop loss, which will result in loss. Okay, well, I kind of disagree with that. So stop loss, it's like and I said this in past videos, it's like you're driving a car without car insurance. Well, nobody drives with the thinking that they'll get into a crash, right? Or you go on a vacation, you buy travel insurance or medical insurance, You don't go on vacation with the thinking that you will get sick, and therefore if you think you're going to sit sick, you're going to get sick, right? It's the same logic, is that it's to protect you in case something goes wrong. So if you buy an asset thinking it's going to go up in value, obviously you don't think that it's going to go down in value. If you think it's going to go down in value, you would not buy it in the first place. But what if you're wrong? That's why you have stop loss, to protect yourself in case what you believe will not happen, right? So that's why, and in necessary, you don't necessarily always need to use a stop loss. You can hedge, right? You can go short. It's not a full hedge, or you can buy, put options or call options, again, depending which direction, to hedge some of your risk. Okay, Lucas says, but the stop loss might be much smaller than the real drop. Okay. There are cases where you put stop loss, it triggered it, and then it went back up higher. Well, that's just life, right? You may want to try again. So it's to, again, protect yourself. That's why you got to really try to determine, hey, where is a level where if I put the stop loss and if it triggers it, it means that the price will definitely reverse and head lower. You don't want to set your stop loss too tight where, because of volatility and choppiness, that it will trigger you and then go back up. Okay, Thomas says, how do professional traders like BNF calculate when to exit in a profitable trade? Okay, well, there's many scenarios. Obviously, one aspect is he utilizes technicals, right? Looking at his technical indicators, looking at price action, looking at support resistance levels. That gives him a guide as to where to take profits. The other thing is where he's just basically looking at specifically a scenario where the price should be going up in a certain manner. For example, it should, once it breaks above a certain level of resistance, perhaps that it should explode higher. If it doesn't, you exit. And this is the same scenario where I think the price, once it forms a certain type of a pattern or a certain type of scenario, if it doesn't break through right away, I sometimes exit. I don't let it wait, because I'm expecting something. If it doesn't do what I think it does, then I will exit, even if it's at a profit. Okay, Elias says, good point, but by placing your stop loss, you already prepare for the stock to go in the let's see. You're prepared for the stock to go in the direction down. How would I prepare? Well, what if it does? Of course, I have to prepare for all scenarios. So it's like I have a backup plan. If it doesn't go in my favor and go up, what's my backup plan? My backup plan is get the heck out at a certain price. Okay, Lucas says, what do you think that high-risk stocks will rebound? So far, rebounded only large cap mainstream. So yeah, very, very good question. So right now, we are in a bull market. Okay, you probably not heard me say that. We are in a bull market. The charts, indices are telling us. But so far, it's mainly the large cap stocks that have gone up in value. But I'm starting to see some of the other indices, like the Russell 2000, indicate that stocks are rebounding. So generally, in stock market recovery, the bigger stocks, the safer stocks, the stocks that are in play will go up first, then the medium size, and then the small caps. Okay, Crazy, what is your best advice for beginners starting to trade MES futures with $1,000? The best advice is, especially if you're trading futures with $1,000, trade with a demo account first. Then if there is any type of a mini contract or micro contract, trade those first, that you will risk much smaller amount. Okay, DG says, thanks a lot. Where can I learn more about when should one start worrying about position sizing impacting the price of the market? For example, gold versus USD market, at what position size? So you have to worry about it probably unless you are, I would say, in a scenario where unless you're trading penny stocks, you don't have, and any other asset that is very, very low volume, you won't have to worry about size having an impact. So that's what I meant by that. But when you get to a scenario where you're trading a few million with a penny stock or a very low volume stock, definitely you will start impacting the price and moving the market. All right, Jason says, is PE the best way to determine high growth stocks? If so, in your opinion, what's the best value to use? I'm trying to implement this into scan criteria. Okay, when you're looking for high growth stocks, you're not looking at PE ratios, okay? Price to earnings. A high growth stock doesn't, when you look for a high growth stock, you don't necessarily measure it based on the earnings. You measure based on sales and revenue growth, okay? So if you're looking for high growth stock, you need to see that sales are skyrocketing. You need to see that the sales are coming in. Don't worry about the earnings, because with a high growth stock, they're not just about making money. They're looking to gain market share, and hence that's why it's considered high growth. All right, guys, I'm a little over time already, and I've actually had some more questions from you guys. What I'll do is I will host another session next week in regards to these questions that you have, because I think that there is generally lots of questions that you guys want to ask me. So I definitely want to make sure that I help you in any way. So let me just take 2 more questions here, and I'll host another session next week, a Q&A for you guys. Okay. Thean says, is there a strategy or technical analysis to catch a short squeeze? Yes. So in terms of a short squeeze, the most important component is you want to look at a stock's short interest. Okay. You want to see how much of the shares has a percentage of the float, which is the number of shares publicly traded. How much are they short? If you see that is a short interest, could be 20%, 30%, 40%. I've sometimes seen, over 50% of the shares in the public float are short. That is a prime candidate for a short squeeze. Okay, lastly, DG says, understood. Yeah, makes sense since XAU USD market has much higher trading volume. Yes, of course. All right, guys, thank you so much for all your questions. I still have lots of questions that I pulled from my YouTube channel that I still have not answered. So I'm going to answer them next week. Again, make sure you guys come here same time next week and bring your questions. I'm here to help you guys with anything related to trading. All right, guys, thank you so much. I'll see you guys next week. Take care, everyone.